You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 7th of November, 2016, a day before the presidential elections, which could have a huge impact on the market. Where is the market right now? Headed down. You hear some of the media mavens saying, oh, this is all based upon Trump going ahead in the polls. My friends, those of you who follow us every week, we all know the market rotated over on our weekly chart going down. Back on the 9th of September, it's almost been 2 months. So again, this is why we pay attention to the charts and not the media noise. We've been making money with this market going down. Again, in your virtual trades, we're not a stock calling service, we're an education firm. We want to teach you how to read these charts. Then when you get good at it, you make your own decisions. We do not give market trading advice. We help you with education. But what we've seen happening is the markets rocket down. If we look intra-week, we look at the daily chart, we can see on the 31st some down movement, big down movement on Tuesday, Wednesday, Thursday, not as much on Friday. Derivative oscillators continued to plunge down, and we've seen the MACD, or now that we use the PPO, that is the percentage price oscillator, same equations, just uses the percentage change instead of the dollar, so we can compare it to other things more easily if we're using percentages than dollar amounts. So we see all of that occurring as the market continues to plunge down. Who knows what's going to happen next Tuesday? We'll talk about that in just a little bit. Now, going back to the weekly chart, we were looking at the total market. Now let's cut that down a little bit and just look at the 500 big volume stocks in the S&P 500. It looks quite similar. It crossed over going down also back on the 9th of September. And we had just about as big a week going down on the week ending the 16th of September as we did in this past week. And that was a good month and a half before the election. So again, we saw this coming. In fact, you all who listen every day know that it was the 27th of October when our 4-hour chart finished its backup, moved over going down, and it was the actual entry point that afternoon, and the market has been moving down since then. And if I remember correctly, that was before Trump was ahead in so many of the polls. Now, if we look at the daily chart just to sort of see what happened over the course of the week, looks very similar to the total market. Monday was a down day. Tuesday, Wednesday, Thursday, big down days. And the market's literally pushed through the Bollinger Bands, the volatility bands, as that volatility has extended. The wider they get, the more volatility. The tighter the bands get, the less volatility. And we've seen volatility heat up and the market push through 4 of the 5 days over the last week through the volatility band. So lots of volatility as they've been widening apart and the market's been plunging. Those of you who jumped in to an inverse trade such as SH did quite well. For those of you who don't understand what we're talking about, ProShares has a short of the S&P 500. What does that mean? It means when the S&P 500 is going down, the short is going up. That means that this inverse exchange traded fund goes up when the market goes down. Again, we want you to practice, get yourself a trading account. We're talking a virtual trading account, any of the online brokers, and start following these charts with us every single day. And you will soon be able to start learning how to read these charts. It'll happen slowly. You'll have progress, then you'll have declines in learning and you'll get a little frustrated, but it's okay. If you'll spend 10 minutes a day with us, you will learn this, but you're going to have to stick with us every day filling out that daily market worksheet. Go ahead and mark your worksheet for this past week. You have both the S&P 500 and the total market, III, in down moves on the weekly chart. It's one big reason you listen to this weekly review and forecast, to make sure that you've got that weekly chart pegged in correctly. Also on the Qs, the NASDAQ 100, it is on a down move on the weekly chart. When we take a look at what's happening on that weekly chart, we could actually increase the, well, no, it's about the same in the down movement. It also crossed over. Crossed over later, the NASDAQ did, than the total market in the S&P 500. That didn't happen until the 21st of October, but it sure enough did exactly what the charts told us it was going to do. On the big chart, once it crossed over, actually had a week of some up movement the week ending the 28th, but then, like clockwork, it moved over and started going down. If we look at what the daily chart set up for us, we can see that the daily chart crossed over on Friday the 28th, and then, of course, Monday, a down day, Tuesday, Wednesday, down days, Thursday, a big down day for the NASDAQ 100, and about as big a down day on Friday. For the record, down 0.35% on Friday for the NASDAQ 100. So all three of our indexes confirmed down moves on actually all of our charts, on the weekly, the 2-day, and the daily chart, and the daily and also the 4-hour. So now lastly, before we get into the news that moved the market over the past week and what might be affecting it over the coming week, we shall look at gold. Gold actually up for the end of the week, 0.07%. We've got an up candle on gold. We don't have a crossover. Gold still in a confirmed down move on the weekly chart, but we did have an up candle at the end of the week. But do mark your charts. Gold has not reversed course yet. The PPO, the MACD, has not crossed over, and derivative oscillator still in the negative. Although they are losing energy, the MACD is actually moving up toward the signal line, but we can't have a confirmed crossover yet. So if we look on the daily chart, what do we see? Well, of course, that's a radically different picture. Crossover going up on the daily chart all the way back on the 19th. We look what happened over the course of this past week. Huge up moves on Monday. And on Monday, some up move on Monday. The first of the new month. Big up move Tuesday, Wednesday, some up move on Thursday, some more on Friday. Again, just barely 0.07%, but huge Tuesday and Wednesday up moves. And the derivative oscillators continue to gain energy. And the PPO, the MACDs, continue to move up. So again, gold on your weekly, make sure to mark that down as still in a confirmed down move. Well, folks, that's where we are on our big charts. Let's talk briefly about what we saw affect the markets over the last week and what can affect the markets this next week and how to prepare for it. Well, we saw that global equities did decline substantially. The press is telling you it's risk aversion ahead of course, the elections in the U.S. on Tuesday. We shall see. Again, we're going to talk about a little bit more about that in just a minute. Other news came in. U.S. non-farm payrolls rose slightly less than expected from October, had just over 160,000 new jobs added. That was a revision made up for some shortfalls over the last couple of months. We also saw a 2.7 year-over-year rise in average hourly earnings. Now, that's something important to note because that's the fastest increase since the global financial crisis, and the Fed has already been moving toward rate hikes. They've been saying that in December, and we shall continue to see if that actually occurs, particularly if there is a lot of volatility post-election in the financial markets, like we've already seen. Now, the Federal Open Market Committee left its rates the same in November, but again, they're hinting that there's a very strong likelihood that they are going to increase the rates. What are they going to increase it? What, 0.25% at the, a half at the most? So again, it's not going to be a great deal if they even do that. And the committee is going to basically have to digest in the meantime the October and the November employment reports, in addition to what might go on with the presidential election. Of course, as we come down that home stretch, what do we see happening? Well, they're saying that Clinton's holding on to a bit of a lead in national polls, but of course a number of polls are coming out showing that Trump has the momentum, and it is a lot harder to hold on to leads than it is when you're gaining momentum. So we shall just wait and see as more and more WikiLeaks and Project Veritas and other bombs get dropped every day with Hillary Clinton as she tries to fight off allegations of just about everything under the sun. We shall see. The purchasing managers' indices in China, Europe, and the U.S., they all rose in October, so they are tending to lead one to believe that that soft patch mid-year may be coming to an end. PMI has had the most dramatic uptick as far as China goes, advancing up significantly in September and October. We also saw that the Institute for Supply Managers Manufacturing PMI rose about 0.2% in the Eurozone. So we'll just continue to watch how all that continues to push through. Oh, and interesting news on the Brexit. Now this is really interesting. The UK High Court has decided that Parliament is going to have to vote to invoke Article 50 of the Lisbon Treaty. That is so they can actually get out of the European Union. Moody's is warning that they might downgrade the UK's sovereign credit rating if they lose access to the single market. We shall see. Again, the Brits are standing strong. It is going to happen. Nobody's going to stop them from getting out. Canada, of course, signed the Comprehensive Treaty and Trade Agreement, CETA. That's going to take out 98% of all their tariffs and supposedly is going to increase trade by the two different markets over 20%. We'll see how that works. It hadn't done so well for us, had it, with NAFTA and such, as we've watched all of our industry go by the wayside. Go ask anybody that lives in the industrialized North in particular. Also, high inventories. There's a one-week build in inventories that have been recorded in oil. That sort of dwindling hopes that OPEC is going to be able to put in any kind of significant production caps, and oil prices have fallen to their lowest levels in over a month. We'll just see what OPEC can do. But at this point, good news if you're driving a car and you have to pay energy costs. But again, we'll continue to watch how that happens. Now, what's going to potentially move the market over the course of the next week? Well, Eurozone retail sales are going to be released Monday. On Wednesday, you're going to have the European Commission updates on economic growth forecast. On Friday, new loan data is going to be released in China. But all that, my friends, totally pales in comparison to what's going to happen in the U.S. general elections on Tuesday. How is it going to affect the market? Have absolutely no idea. So what does that mean to you? If you're practicing your virtual trades, you've done well on these drops, you're in something like QID making money as the NASDAQ 100 has been crushed. You're in something like SH making money as the S&P has been crushed. What do you do going through Tuesday? You lock in your gains if you have not already on Monday. If the market continues to go down, maybe you've already sold out or you're getting ready to, and then you go through what happens on Tuesday and you see when and if there's the ability to jump back in the market. Now, could you stay in the market and hope that it continues to plummet no matter what happens in the election come Tuesday and then Wednesday? Sure you can. That's called gambling, and that is not at all what we recommend. Those of you who are more sophisticated know how to buy puts or calls, where you can actually use options to buy insurance for yourself. The best thing to do is just to close your trade, get out of the market as far as your virtual trading goes, and wait to see how things shake out. If you want to be a gambler, gamble. Why don't you go to Vegas? But if you want to be a real investor, you're going to get yourself out of the market, and you're not going to take unprecedented risks not knowing which way the market is going to go. I can't tell you. Nobody can. So what do you need to do? Close your trade. Take your profit. Wait for another day. If you think you're going to get rich in this game, you're going to have to take too many risks, and you're probably going to go broke. That is our advice when you're dealing with your virtual trading. Again, we're not giving you market advice because nobody pays us to do that, and we don't hold ourselves out to be experts in doing that. We are an education firm that teaches you how to read the stock charts. And once you get good, you can spend your own money however you want to. Thank you so much for being with us, folks. We appreciate you. Hope you appreciate us. If you do, this is the favor you can do for us. You can go to iTunes, subscribe to our podcasts. We actually have 3. We have a video one for the weekly. We also have our weekly, and we have our daily. So please help us out on any of those, particularly the daily podcast. Go there, subscribe, give us a 5-star rating, say something nice about us. Also, you can do the same on YouTube. You can also do the same on Facebook and Twitter. We love to hear from you. Subscribe at chartingwealth.com if you want to get delivered via email our video podcasts, both the weekly once a week and the daily. Every day the market is open. We so appreciate you. Hope you appreciate us. Let us hear from you from chartingwealth.com. God bless. Hope these elections turn out the best for our country and our states. Take care from chartingwealth.com.